Eric Muadh, Muadh.com, with a weekend market analysis for world markets for the weekend of April 18th and April 19th, 2015. I am recording this with the US market down and with about 2.5 hours to go before the US market closes. So that's the view. Let's take a look at how other markets closed overnight. And at the end of Friday's session, we can see that in Asia, we had a down session. In Japan, China was up. We see that Hong Kong was slightly down, and STI was also slightly down. And the other one we are going to cover is the KOSPI, which was unchanged on Friday, and we see that the Australian market was down about 1%. As of the close in Europe, let's take a look at how the close was on Friday, and we can see the markets did end up down, with the FTSE down about a percentage point. The DAX was down the most, about 2.8, and the CAC 40 was down about 1.55%. Why don't we kick off this week's analysis by taking a look at the Canadian market on the weekly. If you recall, last weekend we talked about the possibility of this being a level of resistance on the weekly RSI, and the reason being that every time we've come to this level and shown resistance, the market has pulled back. Did the same thing here. There was a pullback. Come here recently, broke down. There was a pullback after that. We came here, we did show resistance on the line. There was a pullback. Double bottom resistance on the same line. There was a pullback, and now we've come to that general area. We seem to be stalling, suggesting that this is an area where more than likely the market is and will stall. This is true because if you take a look at the same line from a bullish perspective, every time we move above this line, the market has a nice move higher. We bounced on the line here for another move higher. So that line is actually very valid in that the market has been responding and trading with good trends above and below that line. If we take a look at the daily for the Canadian market, we go back to the price action. There was a trend line here going back that was broken in September of 2014. Since that break point, the trend break there, the market has come back over the last couple of days, hit that level, and now we are obviously seeing this as standing to resistance, with the market starting to show some pullback evidence there. So that is an area of the market that already shows resistance on that price level. If we take a look at the RSI, we can see coming off the highs, which was this level here, this break took place with the RSI resistance break there, and a simple line from there gives us where this market has been stalling short term. We stalled here because of the RSI resistance on the line. We stalled here because of the RSI resistance on the line, and now we are looking at uniform activity above the line, back below it, which means that this is an area where a pullback only makes sense. The one thing I do note here also on the monthly is the fact, as of right now, there was an attempt to break out this month above the recent all-time monthly closing high of 15,625. The market did come close to that level but did not manage to get there. So as of right now, looks like a failed breakout attempt in my opinion. Before we take a look at the Brazilian market, just want to show you here that for Friday it is down about 0.81% before the close there, because some of the charts I'm going to be showing you are not live, and this is because they are based on Thursday's close. So if you take a look at the Brazilian market on the weekly, has had a nice uptrend over the last couple of weeks. I think we are coming to a level of resistance, and I'll show you why. Is because of this previous break point on the weekly RSI. That break point was this level, which brought us off the highs of 2014. So if we draw a line from there, we can see that it gives us an area of potential resistance, which is right now here. In fact, if you back test this line, if you take this line backwards, you can see it brings you to this point of resistance, which is off this high, and obviously we had a drop after that. So the suggestion here is that if this is confirmed resistance again, we are going to coil down on the RSI, and prices should also coil down. Otherwise, if the market is to do well, it needs to break out above that obvious line of resistance. If we take a look at the Bovespa from a daily view, so let's go to a daily, we can see that it has come back to a level of potential resistance because of this previous break on the RSI. This break in the RSI coincides with the break off the 52-week highs, and if we draw a line which happens to be around right there, the market has come here and we seem to be showing resistance. In fact, let's take a look at a live ETF that tracks the Brazilian market, the EWZ in the US, and we can see that there is a break of this trend line on the weekly. So that break right there, this break point, is what brought the market down somewhere, let's call it here. So from that break point there, the market did drop there. Market hasn't gone back to those levels ever since. We draw a simple line like that, and we can see that it did give us a sell signal here at the resistance point on this weekly chart, which is there, and now we are coming here. Seems like this is going to be another resistance point, indicating more than likely the next trend is lower, unless the market can move above that line of resistance. If we take a look at the daily, you can see down about 2.3% for the day, and we go back to the previous RSI break, which is here, and that break again coincides with the highs of September there. So a simple line should give us the next major sell signal, and as you can see, this is uniform activity above the blue line and back below it, suggesting that more than likely this is an area where we should start seeing some type of a pullback lower. Let's take a look at the daily chart for the French market, the French CAC 40, and we can see with a down move on Friday, the market is coming back to test this line here, and this line was the breakout line that began this move here. Very nice entry on hindsight, is responsible for this nice uptrend. An extension of this blue line here, and this line was a prior resistance top line. That's why it's relevant. And so after breaking out above that line, it's become support short term. Support during these recent daily pullbacks, double bottom support here for this support zone. So if the market is coming back and showing support around this same line, and if it can bounce, then this should still continue having an upward trend. If we take a look at the weekly for the French market, we can see here that the RSI is still holding above 69.10, but with that drop on Friday, maybe it is now back below 69.10. So the problem there could be that it could be stalling. If we take a look at extension of this previous break line like this, and this break point here began this most recent slide in the French market, so it did go down there. So an extension of that blue line, which was support in 2012, 2013, if it can bounce and hold on this line, any bounce on this line and higher is good. Otherwise, if it breaks below that line and does not recover, then that would suggest that this market has lost some momentum. If we take a look at the German market, let's go to the daily. Had a big drop, as you know, on Friday. One of the reasons, I think, is because recently we made a higher high in price there, higher high in price, but the RSI did make a lower low right there. So that could have been one of the reasons why there was a technical setup for this to go lower. Number two, we broke below this support line, so that's another red flag. And on Friday we had a big drop. Why? Because the daily RSI, after closing at 52.73 on Thursday, did slash through 50, and by slashing through 50, that is why we had that big down day on Friday. We take a look at the weekly here, we see that there is a possibility of a double top on the weekly RSI. As you can see here, over the last couple of weeks, market's been trading very well, and as long as this is the case, maybe this could be suggesting that there could be a serious pullback. The one thing I can say here is, because of the recent breakout, this breakout here did take place with a nice surge. So there was an entry there with a breakout, which was this level here. The market has been very strong, and I think that if we have to be objective here, as long as the market is holding above this breakout line, the market should be okay. In other words, if it comes back and finds support on this line and moves higher, the market should still be trading in an uptrend despite the last couple of days down. Keep in mind, the key to this market, the German market, is on the monthly. As long as the monthly RSI is holding above 69.10, as long as that's the case, this continues to be a strong market. So that's the key. Anything below 69.10 could suggest a little bit of a question mark, but if the market is holding above 69.10, the market should be okay. Another point to observe here is, after this recent breakout at 10,000, the market has gone almost straight with no resistance seemingly all the way to about 1250, and as long as it is above this 10,000 area, then the previous breakout continues to be in play. In other words, the market has yet to confirm any serious break. Let's take a look at the Seng, which had a great couple of weeks. The last 2 weeks after the daily broke out, and this is a daily chart here, there was a nice breakout above this trend line on the RSI there. There was also a breakout in price on this huge trend line on the price. Stock has had a nice run. RSI continues trading above 69.10, so this market should continue still recording some strength. And keep in mind that as long as the RSI is holding above 69.10, that's a strong market. If we take a look at the market in Hong Kong from a weekly standpoint, we can see that RSI did break out, and that breakout coincided with another price breakout on the weekly time frame. So very nice action here, and we can see that the RSI continues trading above 69.10, again a sign of strength. So as long as that's the case, that should be one of the probably the most recent new leadership in terms of momentum in the worldwide markets. If we take a look again at the monthly, just to confirm that we did break out on a monthly chart to more than 7 years RSI highs here. Keep in mind that we are looking at the monthly RSI now trading above 69.1, and as long as that's the case, that's a good market. We see that this is a multi-year time frame breakout. So I think something did change in this market. Indication there is that in the next couple of weeks, next couple of months, maybe even for longer than that time period, this market is looking to record higher highs. We also did discuss last weekend that the MACDs are both making multi-year highs, as you can see here, and all we need is 3 years plus. So there's a 3-year right there, RSI moving to 3-year highs there, and also the short-term time frame, the MACD, is making multi-year highs. So that's probably one of the latest breakouts worldwide, and it looks absolutely strong. If we take a look at the market that was already on fire, if we take a look at China, which was up again, I believe on Friday, continues trading well. Take a look at this move in the daily RSI above 69.1, which happened to be during this price breakout. That market just continues to record higher highs. A very strong market there, and should be okay. And if you recall, when the market came back to this line during the most recent pullback, we were suspecting that was a buy signal based on our RSI work. So we did suspect that that could be an area of support, and that was during this move here around the 50-day moving average. And since that support, this market has just taken off. And I've been saying for a couple of weeks, couple of months, that the market should continue trading well in China, because if you take a look at the weekly RSI, it has generally remained above 69.10 since this move here sometime in September, August of 2014. So that market has been defending that level of 69.1 since then, and that's why you can see that this is an absolutely dreams market here. Very strong momentum. At some point it's going to pull back. How much of a pullback we're going to get, I guess it's going to depend on how the charts are going to develop and how they're going to look. On the monthly, take a look at this spike above 69.10, and that did take place towards the end of 2014, and the last time it did something similar to that was here just before the Olympics, and that did take the market to an unbelievable move from about, on a breakout level, from about, let's call it under 2,000 all the way to 6,000. So without knowing where it's trying to go, this market continues to be strong. It's only after it broke back below 69.10 here that it started recording lower prices. So as long as we're trading above 69.10, which is the key on the monthly, this should continue being a very strong area of world markets. If we take a look at the South Korean market, and I should note here, I can see that the US market, with about 2 hours to go, seem to be trading at lows for the day. If these lows are going to hold, we'll see. So the US market seems to be having a big down day, and we'll see how they're going to close. But if I can spend a second here in explaining why I think this is always going to be a big down day in the US, is let's take a look here at the US market right now on the daily, and we can see that on the S&P 500 for today, it is moving its RSI below 50, and as you can see, there confirmation that the RSI is moving below 50 today, which might explain the big down day. If we take a look at the NASDAQ or the Dow, let's take a look at the Dow daily. For today, it is having this huge drop, relatively speaking. The reason why is because its daily RSI again there is slashing through 50 right there after closing above 50 on Thursday. If you also take a look at the NASDAQ, see how its daily RSI is behaving, and we can see the NASDAQ is also having a good chunk down because the daily RSI is slashing through 50, as you can see here. So that's the reason, and keep in mind it's the same reason why the German market had a big down day. So let me show you that. Alright, so the German market did close on Thursday, which was April 16th, closed with its RSI at 52.73, and Friday it too slashed through 50. In fact, I see this all over the place. If you take a look at the Indian market, Bombay Exchange, you can see that had a big down day on Friday. Why? Because after closing at 52.28 on Thursday, it did close and trade below 50 on Friday, which was responsible for a big down day. And we can see that that momentum corresponds with this breakout here on the daily RSI. So this breakout, keep in mind that we are trading above 69.1, hence the strength. If we take a look at the weekly, we can also see that there was a major multi-year channel here in the price, and this wedge is huge. It goes back to 2011, this huge massive wedge. Finally, we are breaking above that wedge, which is a strong buy in the market, which might explain the recent explosion higher. We are also breaking out above this declining RSI line, and there's also another prior line of resistance here. So we broke through all that resistance, which might explain the sudden explosion in price. RSI is also moving on the weekly time frame above 69.1. So lots of good things going on there. Let's take a look at the monthly. And we can see that the monthly is also breaking out above multi-year price range there. Very nice entry there in price. Good breakout for now. And we can see that the RSI is making at least what seems like a 3-year high. So this RSI is trading at 3-year highs, sign of strength. And if we take a look here at the MACDs, we see that at least one of our MACDs is just about to make a 3-year high. So the minimum requirement for bullish market is being met here as far as Hong Kong is concerned as of right now. Another world market that seems to be breaking out is Singapore. Recently broke out above this band of resistance here and has recorded a nice back to back 4 weeks in a row over the last couple of weeks. If we take a look at the monthly, we can see that it too is moving its RSI to 3-year highs, which is the minimum requirement for a bullish move. So breaking out to 3-year highs on the monthly RSI, and we can see that at least one of our MACDs is just about to make 3-year high. Not the best looking one in terms of MACDs being at new highs, but close enough. So this looks like it's developing into another area of the market where momentum could be moving into. Let's take a look at Japan, which seems to be also forming a double top on its weekly RSI. So that could be a problem short term right there, this double top on the RSI. We can see here that if we take a look at the daily, recently we made a higher high in price. As you can see, higher high in price here, but the RSI made a lower low. Keep in mind this market was down on Friday, and this chart does not show that Friday drop. So this makes sense that now we are pulling back. If we take a look at the monthly though, you gotta be a little bit careful here because this market has been acting well as long as its monthly RSI has continued holding above 69.10 since this breakout here going back to about September of last year. So since this breakout, this market has been trading well here and also here. So the key is as long as it's trading above 69.10, this market should continue looking strong. If we take a look at the Australian market, we can see that it too had been trying to break out the last couple of weeks, but seems to be stalling. It was down 1% on Friday also. And we can see that on the daily RSI, we've been talking about a wedge, as you can see here. So depending on how things do develop here, a breakout above this wedge is going to be bullish. Otherwise, if we break down below this wedge, we should expect a big down move. In fact, if you take a look at the weekly for the Australian market, there's some reason here to be a little bit cautious because this market has failed to move above this RSI resistance line here. So it seems to be stalling, can't seem to move above this RSI resistance line. That could set up for continued move lower. If we take a look at the monthly, we can also see that it needs to be above the previous monthly closing high of 5898.48. If it cannot hold above that previous monthly closing high, then this is definitely gonna stall. If we take a look also at the RSI, we've come to a level of resistance on this long-term monthly chart. This is where it's been stalling, and so it has a chance of also either moving above these two lines of resistance for a nice breakout. Otherwise, this could turn into a resistance area. Before we take a look at the Indian market, let's take a look at the ETF that tracks the Russian market here in the US, RSX. And we've been talking and waiting for some type of resistance on the weekly time frame based on this line here, even though it's had a nice run over the last couple of months or so, nice recovery, but it's come to a level where the RSI has been stalling. As you can see, there was a stall point here, which was the highs in 2013. There was a high here, short term, which is here, end of 2013. The highs of 2014 came on the same level, which is here, and now we are back in this RSI level. More than likely, if this is confirmed resistance, we should expect this market to be pointing down. The one thing I can point out here is that on the daily for the RSX, if we take this breakout line here, so recently there was a nice breakout above the resistance line here for a nice move. So if the market can hold above this line, right now it's trading at the line. If it can hold above this line, that's good. Otherwise, if it trades below that line, then that would suggest that anything below this line here could suggest that this move has broken down. And there's also a bearish argument that can be made because of resistance going back to the highs here. This high, there was a breakout somewhere there, and if we draw a straight line, you see you get a lot of data. This was the break point that gave us the high right there, and since then this has turned into resistance short term, which is this high, and a shallow pullback here, and now we've come here. Seems like double top. Hope you can see that. Seems like double top, suggesting that maybe, just maybe, the Russian market has already given us a short-term sell signal. And I believe it's a sell signal because if you take a look at the EDC weekly, which tracks the emerging markets ETF, you can take a look at this break. You can draw it like this. There was a break here, and so this line seems to be resistance right now. If we backtest this line again, we come to another critical point about 2 years ago or year and a half, which was this highs. So this one line, whenever the market breaks below that, we seem to be dropping. Here we dropped lower. There was resistance and a break here, which was off the highs, and we dropped. And now we've come to that same line and are showing resistance. Indication there is that more than likely we are going to be trending lower. We take a look at the daily for the EDC. Just like the Russian market, we have come back. In my opinion, what the market needs to do here is hold above this line. If it can hold above this breakout line, it might have a chance of moving higher. Otherwise, if it trades below the line, given the weekly chart looks a little bit bearish, that would indicate lower prices. All right, let's take a look at the Indian market next. Eric Muadid, Muadid.com. Let's take a look at the Indian market, and we can see that it was down about 1% on Friday. And the reason being that we had been talking about the possibility of moving below 50, and we see that it did that on Friday. So that move below 50 was, in my opinion, the reason why the market had a relatively big down day. If you go back to where we were looking for resistance on the daily chart, we can see that the market had come back to a prior breakpoint right here, and this breakpoint was responsible for the move off the highs. And so we had drawn a straight line like that. The market did come here and hit that level with the uniform activity. So ever since we saw that resistance, the market has been on a pullback mode, which makes a lot of sense. And on Thursday, we were talking about the possibility of moving below 50 and having a relatively big down day, which is what we got on Friday. Right now, one of the things that I'm watching on the daily here is the possibility that the MACD on the daily rolls over and moves back below zero. If it does that, that movement below zero is going to be confirmation of continued momentum to the downside. So if it can hold above zero, maybe this is just a short blip, but if the MACDs continue trading below zero, I would expect the market there to start trending lower. If we take a look at the weekly, we were talking about line of resistance. If you go back to the lows on the weekly RSI, connecting the lows here in sometime in 2011, and we do it like that, and we can see that this has become a backtest failure zone. And if you are wondering why we are drawing it through this high or through this low, the reason is because of the uniform activity. So that allows us to get as many points, and that's a subject of another video. But so that's how we draw it, and we had been talking about this becoming resistance, one line of resistance, and the other line of resistance is based on the previous break or the breakout, if you draw it like that. And so this breakout was very good in moving the market higher. draw a simple straight line like that. We see we've been using this for support on multiple occasions. On the weekly time frame, as you can see, support here for nice lows, double bottom support here for nice lows. Now it looks like the market has gone into a different phase where what was support has now become resistance. As you can see, we broke through here, which was the movement of the highs, and now we are showing resistance on the same line. And again, I'm talking about this previous breakout line. And now if you include the fact that now we are showing another resistance on this line here, so those are two lines on the weekly time frame showing that the market is now potentially looking to be more on a pullback mode. The one thing I did note is as long as the monthly is holding above 69.10, right now trading at 69.8, then the market should be okay. So that's the key, whether we are holding above 69.1 or not on the monthly. Anything above 69.1 on the monthly is strong. Let's take a look at the hourly. And on the hourly here, we can see that we did have a strong close lower, or at least the final hour. Why was that? Because the market seemed to have moved below that threshold of 30.90 on the hourly. So moving below 30.90, that would be the reason why the market did accelerate lower. If we take a look at the price action on the hourly chart, we can see there was a trend line break here going back to beginning of March, and so we can draw a simple line from there. We can see ever since that break, the market has been coming back to the same level and showing resistance. So there's a lot of resistance on the Indian market short term. We also see that there is a break of this support line here, and the support line connects all these lows, connecting all these lows, and then through here with uniform activity back above it. But what I'm getting at is now this has become resistance. Keep in mind that we are also moving below zero on the hourly MACD. Net, it seems like the Indian market should continue being a little bit on the negative, or at least until it can find some stability. The key for the Indian market, as I've been saying for a while, is whether or not the monthly can continue holding above 69.1.